Hello and welcome to the Daily Exchange. My name is Harry Tucker, filling in again today for Fred Shabesta. He's going to be back again next week, but for now, let's get into today's show. Today we're talking about PundiX revealing the XPhone with total blockchain integration, US stock markets and the crypto market win gold in synchronized diving. We explore why they crashed at the same time. Plus, Bitcoin's new sidechain is here, meet the Liquid network. All of that and more is coming up right now. So before we jump into today's news, I just want to bring up again, and I talked about this yesterday if you're watching, that in next week we'll be hosting, in a few weeks we'll be hosting our very first Skeptics panel with none other than the highly acclaimed Matt Barry, Chief Executive of both Freelancer, Escrow, and Escrow.com. Now, Barry taught cryptography at the University of Sydney for 15 years and is actually an outspoken critic of cryptocurrency. His deep understanding of cryptography and computer science makes quite a surprise his stance there, and makes him an excellent guest to launch our first Skeptics episode with. But now we need your help. What questions would you like us to ask Matt? What topics can we discuss? Get as controversial as you like. We're not going to leave any stone unturned. We want to ask the hard stuff. We want to get the big question answered. So stay tuned when it goes live in a few weeks' time, and we'll answer all your questions with Matt Barry then. But let's take a look at the market, which took a serious dive yesterday, but no one can really agree on why. Now, some commentators are drawing parallels between cryptocurrency markets and traditional asset markets, such as the Nasdaq, Dow Jones, and S&P 500, which all took sharp turns for the worst yesterday. Now, according to Bloomberg, US stocks had their worst day in 8 months. European shares revisited lows not seen since 2016, and the ASX in Australia lost $50 million in its worst day of trading since Brexit. Now, tech stocks were actually hit the hardest, with Business Insider reporting that Jeff Bezos himself lost over $9 billion of his personal fortune due to Amazon's disastrous day of trading on Wednesday alone, just in one day. Now, one issue with saying that crypto markets fell in correlation to stock markets is that this only points out the correlation, but does nothing to address the why of the matter. Now, including this is the US stock market has been in a downturn since last week, while crypto markets have been in an extended period of sideways trading, up until yesterday. Another issue is that it requires a lot of overlap by market participants. It sort of assumes that crypto markets are down because traders who are feeling losses in stock markets are now exiting their crypto positions as well to regain their fiat funds there. Now, considering that the current stock market is being attributed to the ongoing American-Chinese trade war and US economic policy, cryptocurrencies should be relatively insulated given that they're not bound to a nation state or a particular economy. So if yesterday's downturn isn't due to an invisible thread binding stock markets and crypto markets, then what is it? Well, technical analysis would have you believe they have all the answers. Regular viewers will know we have often been talking about how Bitcoin's price is caught in a descending wedge pattern, which has been playing out all year. Now let's take a look at that again. Now, having a look at the pattern within the wedge, we can see that Bitcoin's price had been nearing the top of the trend line, indicating it was ready for a break from the trend, either up or down, and down we went. Many analysts agree we could expect to see Bitcoin's price continue downward till around $6,000, the next technical and psychological support level. What's interesting though is that Bitcoin only dropped by about 4%. Bitcoin has dropped by similar amounts several times in the last few weeks without actually triggering a market-wide sell-off. But perhaps yesterday's sudden downturn looks like the familiar result of nascent marketplace still finding its feet. Now, it's a story we've heard many times before. Cryptocurrencies are also highly volatile, and sometimes that's all there is to it. But if we take a look at Bitcoin itself, Bitcoin Core updates are far and few between. We've got some updates with that this week, and especially when one comes along, we tend to think of it as quite a big deal. However, this next update might not actually be all it's cracked up to be. Now, Blockstream, a startup founded to work on improving Bitcoin's underlying technology, has announced the launch of the Liquid Network, a Bitcoin sidechain. Now, the sidechain will serve as a transaction settlement layer that promises to speed up transaction speeds and keep fees down. Liquid also improves transaction confidentiality and allows for the tokenization of assets. For those new to the term, a sidechain is a second layer solution, which acts essentially as an additional layer of information that moves information alongside the main blockchain. Now, the sidechain uses the main blockchain as a point of reference to keep track of the true state of affairs, such as who sent what, when did they send it, and things like that. In the case of Liquid and Bitcoin, Liquid will allow for transactions to be settled on the Liquid network without having to send those transactions along the main Bitcoin blockchain. This means Liquid transactions will be faster and may offer more features, and that the Bitcoin blockchain will have more room now that transactions are being conducted elsewhere. Unfortunately though, the sidechain is somewhat centralized. 23 cryptocurrency organizations signed up at launch to use and support the product, and this included big exchanges such as Bitfinex, OKCoin, and BitMEX. These organizations also serve as trusted functionaries who work to reach consensus on the network. Due to this, some members of the Bitcoin community are critical of the project and comparing it to centralization of projects such as EOS or other blockchains with trusted nodes. Fortunately though, whichever side of the chain-linked fence you stand on, you should still be able to reap the rewards. As Liquid will offload thousands of transactions from the main Bitcoin blockchain, Bitcoin should become more efficient by pure virtue of being less congested. Much the same way that trains help speed up cars on the road simply by reducing the number of cars around. Furthermore, the Liquid network is being touted as complementary to Bitcoin's other sidechain, the Lightning Network. Where Liquid aims to speed up big institutional level transactions, Lightning looks to speed up those microtransactions. Now, in more interesting news away from Bitcoin, this comes from PundiX. Yesterday we told you about the company's collaboration with the city of Dubai to bring digital currency payments to over 100,000 locations throughout the city as Dubai launches Mcash, or a new digital currency for the city. Previously, PundiX has concerned itself with building cryptocurrency compatible point-of-sale machines. The company describes its goal as bringing blockchain to the world. Well, their latest announcement may actually do it. Yesterday at the Blockchain X conference in Bali, Pundi revealed the XPhone, which it dubbed as the world's first blockchain-based phone capable of making a phone call via a blockchain network. Now, that doesn't mean the device doesn't use any centralized mobile carrier to make calls, but let's actually have a look at it in action.
这里的拨号界面呢，与传统的就是电话功能是完全不同的。这边有两个选项，一个是区块链，一个是传统。传统的就输入数字键盘进行拨号就好了，和刚刚的短消息是一样的。那么区块链电话呢是 call 点什么点后面就是这部手机，就是我要拨打这部手机的节点名称，比如说 Moon。然后我输入 Moon 之后呢，点击拨号按钮，这个时候呢 ，Zack 就可以接听电话了。
Yeah, so Pete has given us the first blockchain call, calling me. So I'll just accept the call, and then here we go. So this is actually a call made fully on the blockchain.
As you can see, the call works by switching the phone over from essentially the regular mode to blockchain mode. Kind of if you've ever used a dual SIM phone, you've got, your main SIM and a secondary SIM, and you can swap over that depending on the function. Now the phone then becomes, when it's swapped to blockchain mode, becomes a node in the blockchain, and the call is made using their node ID. Now this is all done through a brand new blockchain and software called PundiX. However, PundiX says that PundiX is far more than just a blockchain. CTO Pete Huang had this to say about it. He said the PundiX is not just a public chain, it is a total decentralized solution. It consists of 5 essential components: PundiX OS, PundiX blockchain, PundiX IPFS, FXTP protocol, and the PundiX Docker. All have one sole purpose, which is to decentralize all apps, websites, communications, and data. Of those key features, the PundiX operating system looks to be one of the most interesting. Now, it's built on Android OS 9, which makes it backwards compatible with pretty much all Android apps. On top of that, though, there will be a range of dApps powered by the PundiX blockchain. Better yet, PundiX says they designed the FunctionX platform to be so user-friendly that developers coming over from Android will be able to transfer the knowledge over to the new OS. Now, PundiX says that each phone will act as a node on the FunctionX blockchain, and each will have its own address and private key. This will function similarly to traditional URL and IP addresses. Doing so allows for peer-to-peer communication between phones without the need for data to pass through or even be stored on a central server. Any sort of data can be communicated in this manner, and PundiX guarantees that encryption ensures privacy. Normally though, when you transmit data using the internet or on a smartphone, you have to transmit the data via some sort of third party. Doing so means that someone has the chance to snoop or read what that data is. For example, when you make a video call, that data must pass through a server before it reaches the recipient's device. Despite a lot of data now being encrypted end-to-end, there's still the possibility that the trusted third party who encrypts that data is in fact not to be trusted. In April, early this year, a coalition called Reform Government Surveillance, which includes tech giants such as Microsoft, Google, Facebook, and Dropbox, released a statement demanding that governments rein in their attempts to sabotage encryption. The statement was made after increasing pressure by the US government for tech companies to install backdoors into encrypted software. Add this to the Snowden revelations about the NSA's ability to break certain types of encryption, and you can see why a better solution is needed. But to summarize it all up, FunctionX will allow smartphone users to communicate directly with each other without having to ever go through a central authority such as Facebook, WhatsApp, Gmail, AT&T or any other communications provider. With that, all that data will be encrypted and secured by a blockchain, one that is likely to grow in strength with every new user since every phone is actually a node. Now, if you want to hear more about it, of course, head over to functionx.io, where all the details are going to be revealed on Monday. As for when you can get your hands on the XPhone, PundiX says that the XPhone and FunctionX blockchain are currently scheduled for a Q2 2019 launch. This is, for launching a phone when you're comparing it just as a phone, not just a blockchain phone, that's quite a while away, and a lot of its other specs are probably going to be a bit outdated by then unless they do another update of the internals before then. But it'll be interesting to see how it compares to HTC's upcoming Exodus blockchain phone, which also has a focus on data security complete with its own wallet. Now on to YoBit, and it's straight out of the what the fuck are you allowed to do that files. Russian cryptocurrency exchange YoBit has announced that it'll be running its very own pump and dump scheme each day. Like many pump and dump groups before them, the exchange made the announcement via social media. Now, at first, many people thought it may have been hackers and that the account was simply compromised, but no, sure enough. As if it sensed the internet's collective doubt, YoBit went ahead and put a gigantic timer up on the actual exchange website. Now, for those new to the term pump and dump, it refers to a coordinated effort by a group of people to quickly buy up a certain cryptocurrency and artificially inflate the price temporarily. As the price goes up, unaware traders are sucked in to buy the coin due to FOMO. Unfortunately, the coin of the pump and dump are busy selling their coins to these new buyers at levels that far exceed the starting price. Eventually, the price peaks and comes back crashing, leaving the new owners with coins that are often worth even less than when the pump actually started. And if that sounds illegal to you, it's because it is. Investopedia writes that pump and dump schemes are illegal based on securities laws, although it depends on where in the world you are. Just yesterday, Cointelegraph reported that the US Securities and Exchange Commission, or SEC, had filed a subpoena enforcement against an alleged pump and dump ICO scheme. And back in February of this year, the US Commodity Futures Trading Commission began offering bounties of up to $300,000, I should say, on pump and dump scheme. Despite YoBit's odd behavior, the internet has actually been having a great time lapping it all up. Now, Twitter user Psychedelic Alberto tagged the SEC in the YoBit tweet, poking at it. Crypto personality Luke Martin hit them with this meme. And even our own cryptocurrency writer Andrew Munro had this to say. He said that perhaps it's just an equally zany and misguided PR exercise, or maybe someone filled the YoBit office water cooler with a bad batch of homemade vodka. And lastly, to provide you with a bit of final context that really shows off the kind of exchange we're dealing here, take a look at YoBit's Twitter image. Yeah. And on that note, that's all we have for you today. Quick look on prices before we go. Bitcoin, $6,250. Bitcoin Cash, $432. Ethereum, down 13%, 190. And Ripple is at 38 US cents. But thanks for joining in. It's been a good show, good week. Have a good weekend, and we'll see you tomorrow. Next week.